Today, the markets traded positive, but they traded below where they opened. Not a bad situation because you can see the type of pattern that is setting up that's supported right here off the T line. You've got a J-hook pattern. Now, what will be relevant is seeing this J-hook pattern continuing. The reason it will be relevant is right about in this area is the all-time high of the markets. And we're not far away from it. Will it get through this level? Well, if we can kind of calculate, here's wave 1, wave 2, wave 3 of a J-hook pattern. Here's wave 1, here's wave 2. If wave 3 is this same magnitude, it should go well up above the breakout area into new high territory. When it does that, everybody that's been sitting on the sidelines waiting for the market to head up higher and seeing that it's breaking out into new territory will start jumping in. The candlestick investor has the advantage that if they can recognize the pattern setting up, they can be buying in this area, knowing that when it breaks out through this area, everybody else will start piling in. You can see the J-hook pattern also setting up in the NASDAQ. Same scenario. If it continues this uptrend, same magnitude as this or even this, that takes us out into much higher grounds. Seeing positive trading from here allows the candlestick investor to be buying long positions well before the breakout, where everybody else, if they start piling in, remember, prices move because of investor sentiment, and usually the enthusiasm starts coming in when everybody sees everybody else is buying. The candlestick investor has the advantage of getting in well before that happens. Knowing what type of patterns are forming in the markets themselves also allows for the identification of the same type of pattern setting up in individual stocks. Our recommendation on CDLX was based upon seeing the bullish engulfing, close above the T-line, positive trading on Friday, creating the J-hook pattern prospect that this wave right here on positive trading could equal this wave right here. The fact that they gapped it up and continued higher, especially gapping out through the resistance level, told you there was no investor sentiment that was fearful of this level. They were going right through, indicating they were probably going much higher. The big percentage moves are basically the results of what happens in human nature. This is a doji gap up, your best friend's signal. After the consolidation, knowing what type of trend will usually occur based upon this new strength of investor sentiment is a 45 degree. And this 45 degree will last as long as you don't see a sell signal and a close back below the T-line. That allows investors to have a grasp on which signals and patterns are going to work the best or produce the biggest, not only high probability trade situations, but high profit trade situations. That same pattern can be seen in Oracle also allows you to make investment decisions on maybe buying the calls or buying a call spread. But just the fact that we know what should happen after a best friend signal, a doji followed by a gap up, allows you to make much more profitable decisions based upon what is expected after the best friend signal. Our recent recommendation on SPWR was based upon that same scenario. There was your doji best friend gap up, breaking through this trend, pulled back, and then did a bullish flutter kicker signal. A kicker signal that has a little flutter in between. Our recommendation was to buy in positive trading because if it traded positive after the doji rule, which is prices are usually going to move in the direction of how they open it after a doji, that if this traded positive, the bullish flutter kicker, which is one of the strongest candlestick signals, was indicating that this uptrend not only was occurring in a 45 degree, but also was doing a J-hook pattern, adding that much more credence to the uptrend. And if this is wave 1, wave 3 can still produce a good 20-30% upside potential. because human nature works the same way time after time, knowing what should happen after a candlestick reversal signal and knowing what type of result will be from that, you can calculate not only a high probability of which direction the price will move, but you can also calculate the magnitude of the return of that trade. This puts you in positions that instead of being in a steady uptrend when the market's in a steady uptrend, it allows you to find the signals and patterns that are going to produce inordinate profits. That'll be it. We'll see you in the chat rooms.